Hello and welcome, everyone. My name is Karen Austin, and I'm your host today for the first webinar in Manta's Small Business Expert Series, Crowds with Cash. So far, we've had an overwhelming response, and we're really excited to have you here today. Manta wants to thank Fundbox for sponsoring today's webinar and our alternative finance expert, Joseph Hogue, for generously donating his time. Please tweet about today's event using hashtag MantaExperts. It's on your screen there. Our CEO, whose name is John Swansinger, couldn't be with us today, but he wanted to welcome you. So we're beginning with a quick video from John.
Hi, I'm John Swansinger, CEO of Manta. Thank you for joining our Small Business Expert Series. These events, and we currently have 6 on the 2015 calendar, are designed to engage, educate, and inspire small business owners. Our 2015 Small Business Wellness Index tells us that you have high hopes for growth, innovation, and expansion this year, and we want to help. Today's event covers the exploding growth of alternative funding. As technology disrupts traditional funding models, it also empowers individuals and small businesses to explore new ways to finance expansion, hiring, and ideas. The world is eager to lend a hand and help make an impact, and you can make that work in your favor. I know you'll walk away from today's program armed with new insight about today's lending landscape and what it means for your small business. You may also have more questions, and that's okay. Let us know what you need to be successful. During the webinar, please be sure to click on the Resources tab at the bottom of the page to register for upcoming events. Thanks again for attending today. See you next month.
Thank you, John. And so back to me, in case you missed it earlier, or in case you just joined us. I'm Karen Austin, your host for today's Crowds with Cash webinar. I know sometimes when you're attending a webinar, it can feel like you're all alone, but I want to assure you that right this minute, there are 5 Manta team members working on your behalf and nearly 1,200 people registered for the webinar. So I want to take a few minutes to cover our housekeeping items about the event today. During the webinar, you should see a slide area. I've put it on the screen right now, what the platform looks like. A media player, a box under it called the resources list, and some widgets. That should be up in the left-hand corner. And their placement, the widgets are going to depend on what type of device you're using, but most often they're at the bottom of the page. All of the widgets open and close, so please feel free to play with them during our event today. I've added arrows to 3 important ones: the resources list, the help widget, and the Q&A widget. I want to talk about the resources widget first. It's open under the media player. I added the Manta logo there to bring attention to it. I'll be referring to the resource list often today because you'll find links and documents there that you can open and explore while we're talking. If you're having any technical difficulties today, like you can't hear or something's not working, please click on the help widget. That's the one that's just the question mark. My colleague Mel is here, and she's answering technical questions. So just send her a note, and you'll hear back from her. There are a lot of people on the call today, so if it takes a minute, please be patient. I know, too, that you'll have a lot of questions about our content today once we get going, so ask them anytime. Just click on the Q&A widget. That's the one that's in the middle there, and type in your question. My colleague Lynn is here, and she'll push your questions right to me and our expert, and we'll answer them during the last 15 minutes of the webinar. Directly after the webinar today, our expert, Joe, is going to hang around for a live tweet in case you want to meet up there and ask him additional questions, maybe some questions that are specific to your business, and he'll help you with those. My Manta colleague, Heather, will lead that, and we'll give you directions to do that at the end of today's event. Of course, we are recording this event, and we'll send you the link in the next day or so. One more thing, I want to thank Fundbox again for sponsoring this informational webinar. While we won't be talking about Fundbox products today, you can link to Fundbox in the resources widget. So now let's talk about what you came here to hear about, Crowds with Cash. Here at Manta, we put a lot of thought into making sure we're bringing you relevant information, and this topic of alternative funding is not only relevant, it's hot, it's all over the news. As you know, businesses' access to capital started drying up during the recession, and it got progressively worse. The money spigot was a trickle. The headline on your screen bears that out. It says banks slash small business lending by $43 billion with a B. And that headline's from 2011, which, as we all know, was a good while after the recession began. So here's a bit more from that story, that the numbers were backing up what small business owners already knew. The credit crunch was brutal, and business was suffering from it. So here's a better story. This is what we're talking about today. Today, the financing spigot looks more like this. There's cash flowing again, but it's flowing from alternative places. And the headlines tell that. I want to share two of those headlines with you now. Here's the first one. The future is looking bright for alternative lenders. You'll notice that this is from December of 2014. And this story refers to all of that news. I don't know if you paid attention to it in December when Landing Club launched its IPO. Things really haven't changed since then, except perhaps that alternative lending has gotten even more press. Now here's another headline, which is from just this week. Crowdfunding bill passes Assembly. What does that mean? Well, it refers to New Jersey, which is just one of the U.S. states that are passing equity crowdfunding laws designed to open the lending process to more investors. Our expert, Joe, will tell you more about that in just a bit. These stories bear out what we are hearing from Manta's latest research. You can see that research and find out what other business owners think about alternative funding by clicking on the Manta research link in that resources tab that I mentioned a little while ago. Okay, so now let's talk about exactly what we're going to talk about today. Our agenda is full. I'm not kidding, but we're going to give you a lot of information, and we've broken it down into easy chunks. First, I'm going to introduce you to our expert, Joe Hogue. Joe's going to tell you about the various types of crowdfunding and crowd lending. For each of those, we'll tell you about the online platforms, questions you should ask about them, the pros and cons of each type of financing, and finally, we're going to share some real-world examples. Please notice that underlined sentence in the middle of this screen, the one with the asterisks, because Joe's really excited about this concept of using crowdfunding as a marketing strategy, so I hope you'll stick around at least to that point and listen to Joe talk about why he's so excited about that. We're going to throw a couple of polls in today to get your thoughts and to give Joe's voice a break, and at the end we'll take your questions. It's all pretty simple but really great stuff, and now it's time to meet Joe. So this is Joe. Gotta love that bow tie. As I mentioned at the beginning, in case you missed it or weren't here, Joe is an alternative financing expert who's been tremendously generous with his time and expertise in bringing you this information today. Joe started out in corporate finance, but soon discovered he had a passion for investment and helping people understand their money. Joe's also a former Marine. You might notice some of the stuff on the shelves behind him. Because I don't want to take a lot of your time with Joe's entire background, I want to tell you that you can read all about Joe in the speaker widget at the bottom of the platform and check out his blogs and social media there. Okay, so now that you know something about Joe and you know something about us, I want to know something about you. So on your screen, you should be seeing a poll, and I'm going to ask you to go ahead and answer the poll. You can, oh good, we're already getting answers. So tell us what you think about your crowdfunding. Is it charity for social causes? Is it a tool that's used primarily for startups and new product launches? Is it business just asking for a handout, which is what some people tell us? Is it a great marketing strategy? Or is it all or of those things? So I see your answers coming in. Oh, Joe, you're going to be happy to know that a lot of people think that it's all of the above. So that's really great. So I'm going to give you like 2 more seconds, and then we'll see what the results are. Looks like we've got about half of our attendees today who have answered that poll. I'm going to leave it open for just a few seconds in case any of you want to jump in, and then we'll check it out. Okay, so that's better. We're up to like 75%. I'm going to click on the results, and then we'll see what you thought. Okay, so 65% of you think it's all of the above, and it is. So that's great. So I don't know so much about the business asking for a handout, and Joe would probably argue with me about that. So Joe's going to take over now. I'm going to get Joe's thoughts about this, and then we're going to turn it over to Joe, and he's going to start off talking about crowdfunding. Joe, welcome. You're up.
Thanks, Karen. And yeah, those poll numbers come out to really what we've seen in other polls and other surveys. I'd also like to thank everybody for being with us today. Feel free to write in those questions while I'm talking. Tell me to slow down. I get excited about this topic, and it's easy to lose track of time. So let's just jump right in. So what's crowdfunding? The simplest definition is just that it's raising money from a large number of people, typically over the internet. The definition, though, is a little misleading because crowdfunding is so much more than just raising money. It's really about creating a crowd around your business. So if you're still not convinced, then we'll just go over some quick facts here. Crowdfunding reached $2.7 billion in 2012. That was an 81% increase from the prior year. And it's on track to reach $10 billion in 2015. And that's just the market size. We haven't even gotten to that massive marketing benefit for your company that we'll get to in a little bit. The movement really has the potential to bring billions of dollars in funding to companies and projects that might not otherwise get off the ground. So there's two types of crowdfunding. There's rewards-based, where you offer products and services for pledged donations, and there's equity crowdfunding, where you sell a share ownership of the company. Now, while equity crowdfunding campaigns generally raise more money, rewards-based campaigns are great because you don't have to sell a part of your company. You're basically just marketing your services. A donation or rewards-based crowdfunding campaign, it starts with a page launched on one of the sites like Kickstarter or Crowdfunder. Campaigns can be started to launch a new product, develop an older one, promote a cause, or really for any number of small business needs. You'll use traditional marketing concepts as well as new ones, really just to bring people to your page and your message. They'll make a pledge to help you reach your funding goal. Now, once it's live, these campaigns usually run for about a month or two, and at the end of that time, the platform is going to collect the pledged money, and you'll fulfill any rewards you promised. So now there's a popular misconception that crowdfunding is just a last resort way of raising money, asking for help when your business might be in trouble. But to a lot of business owners I know, crowdfunding is just another way to market and sell their products or services. While supporters may be called backers and may receive rewards for their support, they're really just customers getting something in return for their money. In fact, a lot of repeat backers regularly scan crowdfunding sites for new and innovative products that they might not have access to otherwise. So it's a really revolutionary new way to grow your business, and it's helping a lot of business owners get the money they need to really succeed. There's literally hundreds of crowdfunding platforms. We'll talk about three here, not because they're really the best or because I recommend them, but because they have some interesting features, and they show you that these platforms aren't all just cookie cutter. Kickstarter is the largest platform in the world with more than 13 million visitors a month and 1.5 billion pledged to campaigns so far. The site only offers the all-or-nothing model, which means that you're going to set a funding target and a deadline to your campaign. Now, if you don't reach that target through the crowdfunding, then you receive nothing, that the backers aren't charged. Kickstarter doesn't allow a lot of these social projects like charitable causes, social crowdfunding, so you need to have some kind of rewards, deliverable, or a product to give out. The second one here, Indiegogo, is the second largest rewards-based platform, but offers a little bit more flexibility than Kickstarter. This is really by design. Indiegogo has been active at incorporating some of those things that aren't allowed or don't quite work well on the larger platform. Now, the site still gets over 9 million visitors a month, appreciably less, but still a huge market. The Indiegogo also allows the flex funding model, where you get to keep whatever you raise regardless of whether you hit that crowdfunding goal or not. Fees are higher for the flex funding, about 9%, but you'll get 5% back if you meet your goal. The platform also offers a 25% discount on the fees to nonprofit campaigns with that 501c3 designation. Finally, here is GoFundMe. It's a popular platform for those social causes, so you see a lot more medical expense crowdfunding, projects for travel, education, those charitable causes. The site also operates on that flex funding model, so you'll have the option of keeping any pledges even if you don't reach your goal. Now again, these are just a few examples of the rewards-based platforms, so you'll want to check out that detailed list of 18 platforms that I put together. It's in your resource widget to look at. Now beyond any unique features offered by each of the platforms, you'll also want to pay attention to really 5 differences across sites. First, is it an all or nothing or a flex funding model? This is obviously going to be important for what you ultimately get out of your campaign. Do they accept rewards-based projects, or can you really crowdfund anything? Can you crowdfund those social causes, those charitable ideas? Third, is there a deadline to the campaign, or can it be ongoing? Many of these social cause platforms allow an ongoing campaign, really targeting those nonprofit organizations that have constant funding needs. Well, what kind of support and campaign education is offered? This is really going to be more important when we hit equity crowdfunding, but it's also important here with rewards-based. Most platforms have a blog or an educational resource to help people understand the platform and crowdfunding. And then finally, does the platform charge a percentage of what you raise, or is it a monthly fee? Most of these rewards-based platforms are going to charge about 5% of what you raise, and you pay an additional 3% in payment processing. So this means 8% of your crowdfunding comes off the top, and that'll be important when you go to budgeting. Monthly fees on these sites are usually from $100 up to a few hundred. So let's talk about the pros and cons of crowdfunding. Now the main drawback to crowdfunding is that a successful campaign can take some time to put together. Campaigns usually mean at least 3 months of outreach and community building before the launch. After the launch, most people report between 15 and 20 hours a week working on their campaigns. Another drawback, if you go with that all or nothing model, is that you're going to receive nothing if you fail to reach your funding goal. The risk here can be reduced by setting a realistic goal and then listing out stretch goals and stretch rewards, really, to keep your visitors motivated and keep that support growing. Even with this drawback, the failing to reach your goal and collecting nothing, you're still going to see some great marketing benefits and stuff that we'll talk about in a few more slides. So now business owners already have a lot of the marketing material and the processes that you're going to need for crowdfunding. You already have a customer list or a group of people that are familiar with your business. You're also going to have that marketing material, the content that describes your product, and you're going to know the real selling points that you're going to need. So a lot of this additional time we see in personal campaigns probably won't be applicable to small business campaigns. And this is really why I tell business owners that I talk to, all businesses should be crowdfunding. It's really just an extension of your business into the online space. So the pros really win out over those drawbacks. I promise to talk about that #1 benefit later, and we'll get to that, but the most obvious benefit is just that you don't have to repay the money. You've raised money and sold a series of products or services, so it's really more like a business transaction than it is fundraising. Now we'll get into our first example here. It's a really interesting campaign that actually just closed out last week. All Crumbs Artisan Bakeries in Toledo, Ohio. It's an operational business, been up for more than a year, but it's only been selling to farmers markets and wholesale through local restaurants. So now the owners launched their crowdfunding campaign on Indiegogo to raise $10,000 to expand into an actual storefront retail space. And as I've seen with a lot of business owners, Dan and Gabe, kind of struggled with that idea of asking people to help with their business. Besides offering some of their own breads and baked goods to the campaign supporters, they did something a lot of crowdfunders are doing and built in a charitable cause. So within the rewards and the funding goal, they promised to deliver loaves of bread to local Food for Thought food pantry. While the campaign didn't ultimately reach its $10,000 goal, Dan told us that the bakery raised over $6,000, which on that flex funding model is going to allow them to move forward with their build out and still donate about 1,200 loaves of bread. So a really great success for an existing business. And that moves us into my favorite slide here, and it's really because crowdfunders don't even think about the real benefits of crowdfunding. All Crumbs Bakery found it out through the thousands of visitors to their crowdfunding page, and that's just for a local bakery that didn't even have a storefront. And I'm excited because crowdfunding is so much more than just raising money, and most people don't even realize it. People overlook those real benefits because they hold that singular definition that crowdfunding is just about fundraising. And it's not. It's really about marketing. I've known crowdfunding campaigns that were launched exclusively for the marketing exposure. And if you think about it, Kickstarter alone gets more than 13 million visitors a month. Many of these visitors are eager just to find new products and new technologies or new causes. It's really a willing audience like you'll find nowhere else. Now consider that your crowdfunding campaign is going to be a complete page dedicated to your product and your message, and it's absolutely free to put up on some of these sites. How much do you think you'd need to pay for that kind of advertising on another site with similar traffic? It could be up into the hundreds of thousands, really, and that's for an advertising box. So you've got real potential here to see massive exposure. Just for an example, the Kickstarter campaign for Reading Rainbow got over 2 million page views and opened up a whole new generation to the TV show. Another benefit of crowdfunding is really the feedback and sense of community that you'll get from supporters and visitors to your page. Because crowdfunding has grown up in this environment of people helping other people fund their business dreams and social causes, people are extremely open and willing to communicate. You're going to pull teeth getting that kind of feedback from your customers, but crowdfunding supporters are always open to offer their opinion. And it's really because these supporters, they feel a level of buy-in with the campaigns that they support. So in your crowdfunding supporters, you're not only going to get lifetime customers, you're going to get lifetime cheerleaders of your brand.
Excellent. Thank you, Joe. Hey, it's Karen again, and I want to stop you for just a second because we had a really great question come in about crowdfunding and taxes. So when businesses are crowdfunding and they, for example, the bakery example, and they raise that money, is that taxable income?
That's a really good question, and it's one that gets overlooked by a lot of crowdfunders. In most circumstances, money raised crowdfunding is going to be considered as income by the IRS. Now, it can be a charitable donation if you have a 501c3 exemption, but for the most part, plan on it being income. Now, you can deduct any expenses related to the campaign or rewards fulfillment, so it's really important to keep those records. And business owners probably won't have quite as much a problem with this as personal campaigns because they're used to keeping the track of those sales and expenses. So really it's best just to think of crowdfunding as an extension of your business strategy, selling products for a price and offsetting that income with some of those expenses for tax accounting.
Excellent. Thanks, Joe. And just as a reminder to our audience, that was a really great question, so please keep those questions coming, and we'll answer them at the end of the webinar. Joe, back to you.
Okay, great. Now let's move on to equity crowdfunding. It's really been around for ages, though you probably know it better as going public and selling a share of your company through stock on one of the exchanges. The only difference here is that stock sold in equity crowdfunding is not traded on an exchange. So people investing in the company are not buying and selling their shares on a regular basis. They're really part of the long-term investment strategy. There are quite a few more regulations and forms that come with equity crowdfunding, but the amounts raised are much higher. While 61% of rewards-based campaigns set their goals between about $1,000 and $10,000, equity crowdfunding campaigns generally raise hundreds of thousands or even easily into the millions of dollars. So now the history behind equity crowdfunding is important because it's still really a movement in transition. Equity crowdfunding as an online phenomenon really got started in 2012 when the Title II of the Jobs Act was passed. Now this allowed businesses to advertise the sale of a portion of their business on the internet, though it still limits actual investment to people with more than $1 million in net worth. These are called accredited investors. Now you see, before this, companies couldn't even put their campaigns online because everyone, even the non-accredited investors, would be able to see them. Now the next part of the Jobs Act, called Title III, will allow anyone to invest in equity crowdfunding, just like stocks traded on the New York Stock Exchange. Stock regulators are more than 2 years late writing up the rules for this part of the act, though. So a lot of people, myself included, have kind of given up on the wait. And it's really too bad because it would really open up a new type of investment to a lot of people. You'll see here from the chart of household income in the United States that less than 5% of households are now able to invest in equity crowdfunding because of those accredited investor rules. Open that up to everyone and you really get a sense of just how big this market could become. So another interesting development, one that Karen alluded to earlier, is that States are now starting to craft their own crowdfunding rules around this delay in the federal rules. So over a dozen states in the District of Columbia now have separate laws where a state-incorporated business can post their equity crowdfunding campaign on one of those state-specific platforms. And any resident of the state can actually become an investor. So you'll want to check to see if you're in one of those states. Now, there are just as many equity crowdfunding platforms as there are rewards-based, but we'll go through a few examples of platforms that are doing some pretty interesting things. Crowdfunder, the first one here, is one of the larger platforms with 194 million in deals across more than 21,000 companies. The site charges a flat $300 monthly fee and requires a term sheet, investor pitch deck, and a summary of campaigns. Now, this is fairly standard across equity platforms, so you'll see the requirement for a lot more documentation and investor presentations. The second one here is Fundable, which is one of the few platforms that offer rewards-based and equity crowdfunding options. The site doesn't charge a percentage fee, but it also charges that $180 per month for equity campaigns and the monthly fee plus 3.5% per transaction for payment processing on those rewards-based ones. Finally, here's CircleUp, is a platform that focuses on consumer and retail companies. Companies typically need to have a few years in business and at least $500,000 in annual sales. One of the cool features of CircleUp that a lot of other platforms are starting to incorporate is that they're inviting professional investment firms and analysts to participate on the sites as experts. Now, this idea is that investors can follow the opinions or investments of these experts and invest alongside them, usually for a small fee. So as a business owner, it just makes it all the more important, really, to reach out to these firms and analysts that already have a following to help promote your campaign. Just as with the rewards-based platforms, there's some important questions you need to ask of the equity platform just to make sure that it's really the right one for your business. For equity crowdfunding sites, support's really going to be key to choosing your platform. The process of selling ownership in your company is much more detailed and documented than with the rewards-based process, so you'll really need the support of the platform. Revenue requirements and types of businesses that do well on the site is another important characteristic. Some platforms are going to attract a certain type of investor that may like a certain type of business. Some require established sales and years in business, while others will post startup campaigns. And finally here, the community and that established investment groups on an equity site is going to be important. Finding a site that has that active community of investors that interacts with the companies and with professional analysts can really help market your campaign. So moving on to the pros and cons of equity crowdfunding. Money into equity crowdfunding has really been taken off, and there's never been a better time to raise money to take your company public. This is one of the most obvious benefits of equity crowdfunding, just that it makes the process of raising that large amount of capital easier than with previous avenues. But there's some downsides as well, and the most obvious is going to be that you're selling a piece of the company and the right to some of those future returns. In exchange for much larger amounts crowdfunded, you have to share control of the company and profits. But on the plus side, besides the money you crowdfund, equity crowdfunding could also help put you on the radar of a lot of venture capital and private equity firms. Now, these firms normally might not even look at your company until it's raised a few million in development funds. But after being vetted by crowdfunding and the crowd, you might be able to get your foot in the door, which really can provide some of these advisors that can really take your business on to the next level. So on that drawback of selling and ownership sharing your company, I usually recommend to businesses just to try out rewards-based crowdfunding first. You're likely doing a lot of the marketing activities anyway, so a crowdfunding campaign is only going to take a marginal amount of time. Besides raising money for a project, that first campaign is really going to teach you a lot about crowdfunding, and it's going to help you make a better decision whether you want to try equity crowdfunding in the future. So I pulled our equity crowdfunding example from the EquityNet platform. Mineshaft Brewing is a startup brewer of craft beers in Park City, Utah. The owner raised some money from friends and family before turning to crowdfunding, just to show a level of commitment and do some development before seeking equity investors. This, again, is typical of equity crowdfunding and private capital in general. You want to build that level of commitment and social proof, really, before bringing in other investors. So now Tim just closed out his round of seed financing, crowdfunding $665,000 in February. He used that money to further develop the marketing channels, the distribution for the brewer, which actually is going to have about a 60,000 barrel capacity on day one, and distributors that are already lining up for the capacity. He started a new campaign in March to raise $9.4 million for a Series A round. And so looking through the company's profile here, you get a sense of how much more detailed equity crowdfunding is compared to rewards-based. Investors can download business plans, regulatory documents, and several different kinds of marketing documents.
Excellent, Joe. Such great information. We're getting a ton of questions coming in. I'm going to put those on hold because I know you want to get to the peer-to-peer lending that we're going to talk about in a minute. But before we do that, I want to take another quick poll. So I've just put it up on the screen. And the question here, because we're going to jump to online lending, the question here is, would you consider borrowing from an online lender? We know that when we did our Manta research recently, a lot of people didn't have experience with online lenders and didn't have maybe a huge trust level with online lending. So really be interesting to hear what people have to say here. Would you consider borrowing from an online lender? Yes, no, maybe, or if you know more about it. And I can guarantee you that you're going to know more about it in about 10 minutes. So we are up at about 52% of people who have answered the question. So I'm going to wait just a few more minutes and see if we can get that up a little bit higher so we can get a good sampling of our audience today. Okay, great. So we're getting up toward 70%. So let me take a look here and see what people have to say and share it with you. So there we go, Joe. Yep. Yes, if I knew more about it, yes and no. There are people who won't borrow ever, but it's always good to know what your options are in case you get some great opportunity. So, Joe, I'm going to turn it over to you so you can transition from crowdfunding and begin talking about peer-to-peer lending.
Okay, excellent. So really the concept of peer lending couldn't be simpler. Investors have been buying portions of loans for ages. In the past, they'd just have to go through a bank or through a brokerage firm that would bundle their loans and sell off smaller chunks. And of course, a piece of the return is going to be carved out at each stage in this process. Now with peer lending, investors are going straight to the source to invest in small businesses and personal loans. Peer lending platforms like Lending Club and Prosper just act as an administration connecting these borrowers and investors. So our borrower is going to go to one of these online sites to fill out a loan request, just as they would a traditional loan. Loan requests and other documents are verified by the platform, and investors commit to fund a portion of the loan. Borrowers remit their monthly loan payment to the platform, just as with a bank loan, and the loan platform passes that money on to investors. So loans are going to be for fixed rates, terms usually from a year to up to 5 years. Now, new financial regulations and loan costs are really forcing banks out of small business loans. It costs just as much to underwrite a $2 million loan as it does a loan for a couple $100,000. So banks are really leaving this small business space. Bank lending for small businesses has really just dried up over the last few years, but fortunately, peer lending is there to pick up that slack. Now, there are just as many peer lending platforms as there are crowdfunding sites, maybe more. So you're really going to want to shop around for those different rates and features. I'll highlight 3 examples here. Again, not necessarily because they're the best for your needs, but because they show that there's no real one-size-fits-all for peer lending features. Lending Club is the largest P2P marketplace in the world and originates more than $1 billion in loans every 3 months. The site's one of the few that allows non-accredited investors to participate in the loans. So there's a ton of demand for these loans. The platform offers personal loans up to $35,000 and small business loans up to $300,000 on fixed rate terms from 1 to 5 years. Business borrowers generally need 2 years in business and at least $75,000 in annual sales. And one interesting development here with Lending Club is that Alibaba, basically the eBay of China, has partnered with Lending Club to help provide low-rate loans to U.S. businesses looking to expand their sales into that Chinese market. Next here is StreetShares, exclusively focuses on business loans with a max of $50,000 per loan, but it doesn't require those annual sales or years in business. The platform is founded by a veteran and is known for funding veteran-owned businesses. Besides the focus on vets, I like the platform for a couple of different reasons. The company invests 5% in every loan on its site, so it has that vested interest in verifying loans and working with the business owners. The site also runs kind of a unique auction model. Instead of telling you what the rate is going to be when you finally get that dispersed, it's going to go on the site and investors are going to bid on the loan at the lowest rate they'll accept. And the loan is funded at that lowest rate available. So you could potentially get a much lower loan rate than you might otherwise have available. Finally here, Lendor is another interesting P2P example. The platform bills itself as crowd lending for businesses because it really mixes that crowdfunding and peer lending model. On Lendor, you decide the loan terms, how much you need, and what rate, and then you get people to visit your loan page, just like in crowdfunding, to support a portion of that loan. Anyone can invest in the loans, friends, family, and even your customers. So beyond any of these unique features that you're going to find, for peer lending sites, there's also 4 things that you really need to look for when deciding which is right for your needs. First is obviously whether loans are fixed from your application or there's some kind of an auction process that might be able to lower the rate. What are the terms offered for loans? Most legitimate platforms offer loans of between 3 and 5 years, maybe down to 1-year loans. I'd be careful of sites offering loans less than a year because the rates can get pretty high on some of these short-term loans. There should never be a prepayment penalty on loans either, and most are fixed for fixed rates once they've been set. Now you'll obviously want to check out the fees charged by the platform and whether they invest in loans as well as investors. Finally, while non-accredited investors are only allowed to invest on a few platforms like Prosper and Lending Club, this really hasn't been a big issue yet because there's just huge demand for loans by accredited investors and larger investment firms. So talking about the pros and cons of peer lending, the most obvious drawback of peer loans is that it has to be repaid. It's just like a traditional loan from a bank, and it's going to go on your credit report. Predatory lending practices at some platforms, especially the ones targeted to small business owners and short-term loans, is another drawback, but it's one that's easily avoided, actually. You'll always be given a document that spells out the rate and the terms of the peer loan before you accept the money, and this actually happens multiple times, first after you fill out the application and then after your loan is fully funded. So now, I understand that there's sometimes a need for these short-term loans, but the rates on the platforms for 3 and even 1-year loans can get pretty steep. A lot of times it's best just to take out that 3-year loan on another site at a much lower rate and then repay it within a shorter period. The biggest drawback really of peer lending compared to crowdfunding is that you're just not going to get that marketing and outreach benefits. The benefit of peer lending is that it's relatively fast and pretty easy to get. It's going to take you probably less than a few hours on most platforms to fill out a business loan, and that's including detailed financials. Verification usually takes a couple of days, and the demand for loans is so strong right now that a lot of loans are getting funded within a day. So whereas a traditional bank loan could take weeks or even months, the entire peer lending process is taking less than a week a lot of times. Now, I talked to a CEO of one peer lending platform recently that quoted bank loan approvals for small businesses around 20%. Now that's 4 in 5 businesses that just can't get the money they need. And that same CEO actually said that loan approvals on peer lending platforms are as high as 60%. So I pulled our peer lending example from StreetShares, that veteran-focused business lender. Matthew Griffin here was an Army Ranger in Afghanistan. When he returned home, he put together his idea for combat flip-flops, really, and it's based on the concept that economic development really drives education, politics, and ultimately peace. He wanted to manufacture a line of footwear and accessories in areas affected by conflict for sale internationally. So naturally, traditional lenders were a little reluctant to loan money for manufacturing in a post-conflict country like Afghanistan. Griff admits that he might not normally have taken the 23% rate on his $30,000 3-year peer loan, but there was no prepayment penalty, and he needed the cash for his spring line. He says that the time saved from hunting down other sources of funds more than paid for a little higher rate, and he ended up paying it off earlier without any prepayment penalties anyway. So with the funds from that pure loan, Combat Flip-Flops was able to expand production into Laos, Colombia, and Kosovo, and has progressively grown between 200,000 and 400,000 each year. So let's finish up with talking about the ways to take advantage of the entire alternative financing crowd. You're talking about the pros and cons. It can really seem like an either-or scenario, but really that's not the case. Many companies are going to use that mix of equity and debt financing. And when I say equity here, I mean rewards-based crowdfunding as well as equity crowdfunding. Now, crowdfunding is a great tool, but as I mentioned, a successful campaign, especially one in which you're trying to raise a large sum, is going to take quite a few months in preparation, and then months after the campaign is live as well. Even after the campaign is over, you're still going to have time spent to fulfill rewards and communicate with your backers. So now with peer lending, you get your money in as little as a week, and that can mean a lot of flexibility for your business. You don't need to worry about rewards or communicating with backers. You just pay the loan off as you would any other type of debt. But for funds needed without that immediacy, or if you just want that innovative way to grow your business through community and take advantage of some really great free marketing, then you definitely want to be in crowdfunding. Even if you don't reach your goal, you're still going to reap a lot of those rewards from marketing, outreach, and exposure.
Joe, thank you. I can tell your voice is going. Take a break, get a drink of water while I chat with our audience for a second. So for those of you who might not have been on when we started, I'm Karen Austin, and I'm your host today. So in just a second, we're going to take some of these great questions that have come in today. While Joe gets a drink of water, I'm going to mention that if you want to chat with Joe immediately after the webinar on Twitter, you can do that at the hashtag MantaExperts. If you have something that you want to talk about that's directly related to your business, something came up while you were thinking about it, just jump on there and chat with Joe. You can also connect with Joe and other business owners in the Manta community. Our Manta community is a great place for people like yourself to chat with other business owners and see what's going on with them and what things they're dealing with. So you can get that link in the resources tab, and you just click on there and check out our community. One more thing. Our April webinar is going to be about healthcare reform. You can open that resources widget to get more information about that. And in just a second, you ready, Joe, to take some questions?
I sure am.
Okay. So let's see what we have here. I've got, here's a question. I have a startup that provides data analytics services. Does it make sense to use crowdfunding, or what kind of rewards could I use?
Data analytics. Okay, that's pretty far into the into offering those rewards. Crowdfunding is great if you can expand it into some kind of a social cause, or obviously give people the opportunity to be part of something bigger than they are. But it really can work for any product. It is a matter of finding those rewards. So you're going to use a lot of the concepts that you use to sell your data analytic tools in your general business, on your website, or however you sell them. Really, with crowdfunding, it's best if you have a specific project that you can get people to get behind. Maybe you need new software, or maybe you can add features if you have maybe $5,000, $10,000 to put towards the software. So it's really a lot of times not a matter of finding the rewards you have available now, but finding that one special project that you've really wanted to do. Maybe customers have asked about, there's a demand for, and you can say, hey, let's all get behind this project and make it better and get this expanded customer service or expanded product out.
Great. Okay, Joe, I have another question. Here's the question. Can a crowdfunding effort, business or otherwise, use more than one source concurrently? But I'm assuming
they can.
Means one source of
more
funding.
Platform.
Yeah, okay.
Yep. Or one source. source of funding or be on more than one crowdfunding platform? And I guess I can answer both. Go ahead. Okay. As far as using more than one source of funding, of course, that's really what we talked about at the end of the presentation. Use peer lending to get that immediate cash, maybe to develop some of your marketing, to develop some of those initial stages of your product, to really be able to build your community and get ready for your crowdfunding campaign. Now, whether you can be on different platforms, whether you can be on Kickstarter at the same time you're on Indiegogo, at the same time you're on GoFundMe, you can as well. You can be on those. The thing is, it gets a little bit harder because obviously, you're trying to manage backers. You're trying to manage a community across all three platforms. So, I've seen it work. I've seen it work really well for some campaigns. I think, especially for an initial campaign, then I would stick with one platform and really try to drive my community there. Rather than try to possibly bite off more than I can chew, because a lot of people do find out that it's a little bit more work than they thought they would be.
Okay, so great, Joe. I think this next question might address some of that work that it takes to do a crowdfunding campaign. So here's the question. We had a GoFundMe campaign for opening a retail storefront for our custom model rail system business, which has been warehouse office business since 2007. We only raised $123, I think it says. And we have many people who say we're the best business ever and they support us, but we are not being able to get the investors. We used all the avenues, and our business has the potential for $1 million a year if we can get the funding. Suggestions?
Yeah, that's the big problem with crowdfunding, and I talk to business owners about that very thing all the time. And it's a lot of times it's because the media attention on crowdfunding is exclusively to the success stories. Some guy raises $55,000 just to make potato salad, and no attention goes to the process in crowdfunding. And this is something that I focus on the blog, crowd101.com, is that there is that whole process, and pre-launch is probably the most important one. Through pre-launch crowdfunding, so basically 3 to 6 months before your campaign goes live, you want to reach out to your community, you want to talk to them about the campaign, you want to reach out to other people that might be interested in it, other people that have followed that kind of a campaign, not necessarily followed your business, but might be interested in this in this instance, railroad model trains, and you really want to build that support pre-launch, because crowdfunding campaigns are only going to be maybe a month and a half at the most. You really need to have the backer support before you start. So if you can get say 10-20% of your crowdfunding goal met on those first couple of days, you have the potential of being featured by the platform and really expand your reach. But it's a pretty long process. So I would just recommend people maybe go to the site, read through some of the pre-launch articles there, because it's a pretty lengthy process of what you might want to do before reaching out to your community.
For those of you who haven't used the resources widget today while we've been talking, there are a couple links there to both of Joe's blogs. He has one on peer finance and he has one on crowdfunding. He has some really great stories and examples there of what people have done for their crowdfunding campaigns, so I urge you to go check that out. If you can't for some reason access the resource widget, it's crowd101.com, and that'll take you to Joe's other blog as well. So, Joe, we have an equity finance question.
Okay.
The equity crowdfunding.
I would just say that. I'm sorry. I would just say that for that last question, if they want to send me an email, then I'd be happy to maybe look over their campaign and offer some suggestions. Most of these campaigns stay on the platform, so you can look at them and kind of review what was done.
And Joe's email is on his bio. On the speaker widget. It's the little one that looks like a person. You can bring that up. You can also email him right from his platform. So, Joe, here's this equity crowdfunding question. can a corporation create separate class of shares with different voting rights?
Okay, actually that gets into that's a pretty deep regulatory question. Through the traditional route of issuing shares on the exchanges, then that's what a lot of corporations do. Is they issue different classes of shares. A lot of times one class will go to the founders and their family or insiders, and those shares will have expanded voting rights. The other class of shares will be sold on the open market and might not have those same voting rights. Within equity crowdfunding, this is possible as well. There's a lot of different types of equity crowdfunding, whether it's just a royalty-based shares where people might receive a share percentage of future revenues, but they don't necessarily get control of the company. So that might be an option. You can also do the different shares. A lot of this stuff is just going to be written up in your regulatory documents, but it is possible, and it is available under the equity crowdfunding laws.
Excellent. Joe, here's a question about crowdfunding. Again, will crowdfunding work for a contractor?
A contractor. I mean, and it probably seems kind of like a cop-out, but crowdfunding is really going to work for anybody. A lot of it is just finding those rewards that people can get behind, finding the project that people can get behind. What kind of a contractor?
Not sure. Didn't say in the question.
Okay. Well, let's go with a lot of the short-term business or consumer services. Maybe, okay, let's say a home improvement contractor. It might be a little harder. You're probably going to have to reach out with a strong ask to your network and your family. But I mean, a lot of these local crowdfunding campaigns can be just as strong and just as popular as the national and the larger companies. And that's really because you can really get the community back behind your campaign. The offline marketing things that you're going to do with a local crowdfunding campaign are going to be really important. You're going to want to really make that personal appearance out with the community. Get people together, get them talking about your campaign, and that's really going to help it, not necessarily go viral nationally, but it's going to be important to the community, and that's really where those smaller local campaigns are really going to benefit and really going to raise a lot of money.
Great. Joe, I have a question about comparing platforms, which I can almost answer because I know that you've created some comparison of platform documents for people. But the question is, are there any sites like bankrate.com that compare different platforms?
There are. I know there's one site called crowdsunite.com, and that's they've got some different features. I think they might ask you to pay for some of the features, so it's not completely free. On my own blog, Crowd 101, then I've put on a post that looks at 18 different sites. So you'll want to check that out. That's in the resources tab, and that's going to help compare a lot of the fees, what kind of exposure you might be able to get from a lot of these platforms.
Okay. Another question: what is a non-accredited investor?
Okay, so non-accredited investors are really going to be households or people with there's one of two things: either a net worth under $1 million, and that's not including the value of their house, or income requirements under, I think it's usually under about $200,000 for an individual, or maybe $300,000 for a couple. So really, most of us, 95% of households. If you don't have more than $1 million in your portfolio, in your net worth, then you're a non-accredited investor, and a little limited to what you can invest in.
Okay, and we know that may change. soon.
Yes, well, hopefully. Eventually, it's supposed to change. Like I said, the SEC is 2 years, 3 years behind on writing up the rules, and that's why a lot of states have kind of gone around them and started their own crowdfunding laws to really open up that market. And it's really a popular thing for a lot of businesses in a lot of these states.
And I just read that the SEC is on the calendar to reissue something in October. So we'll see then. So here's a question. What's the best method of protecting IP and privacy, but at the same time promote the project concept? Is there not extensive concern over giving away a market opportunity?
Sure, and that's another thing that a lot of crowdfunders kind of struggle with is how do you pre-launch your campaign? How do you talk about it 3-6 months in advance without risking losing some of that protection, or without risking maybe somebody stealing your idea? Now, first, as a small business owner myself, I'd say a lot of business success a lot of times is going to be in the execution. It's not going to be in the idea. I've talked to a lot of companies that their idea was great, but it wasn't necessarily anything new. It's really in how you execute that. So I wouldn't be too worried about talking to other people about your new idea, about your product. A lot of times it's gonna get you more ideas and maybe even support for your campaign. And this is really something I talk about through the process is, you get on those forums, you get in the social media groups of people that are interested in that topic, and you start talking to people about it, and that's really going to build your community. As far as IP, patent stuff, if you can't file some kind of a patent or some kind of a legal protection, then you really just leave out some key details. You can still talk about the service. A lot of times with these, talk about what you might be able to do, maybe just more broader concepts on the ideas. But generally, I wouldn't worry too much about somebody stealing your idea, especially since you've got 3 months, maybe a little bit longer in pre-launch crowdfunding, another month launching or raising your funds. So unless those people are extremely quick with the idea, they're probably not going to have too much time to develop it on their own and really run with it ahead of you.
Okay, Joe. So we still have a ton of questions coming in. So we're getting kind of late. I don't know if we're going to make it to any of them or to all of them. Here's a question. I had seen this question before. Is it appropriate to have a giveaway that collects the email of the crowdfunding participant?
That collects I'm assuming they mean the backer, that collects the email of the person that is funding. Okay. Well, actually, a lot of the platforms they do that. If you back one of these campaigns, then you have an email address in their platform, and they send that through to the to the crowdfunder, to the program, the campaign. Excuse me. But yeah, I mean that would be these people are part of their community. If they feel enough about the project, if they have that level of buy-in, they're 99% of them are going to willingly send over their email. They want to be a part of this project, and that's really what crowdfunding is. It's people not only getting a reward, but they want to be a part of that project. They want to be part of something bigger than they are. So yeah, they're going to want to stay in touch, even outside of the platform. So they're going to want you to have their contact details and be able to have that back and forth even after the campaign. Right.
Okay, so we're almost straight up at 3 o'clock. I'm going to have one more question because I know you'll have a quick answer to it. But to all of the other questions that we didn't get to, we have collected all of your questions, and we will answer them via email. So please rest assured that we will get to your questions. So here's this last question, Joe. What are some crucial pre-launch steps needed for crowdfunding? And I know you can answer that in like one sentence because you already created a document about this.
Okay, well, I guess the one sentence would be, I have a step-by-step crowdfunding book available on the site. Just go to the site, and then I believe it's under ebook and crowdfunding services. It's only $8. But you know what? Honestly, if you want to just look around the site, a lot of the information is there. There's a couple of them called pre-launch crowdfunding, pre-launch hacks that you're going to want to look through. Basically, you're going to want to do outreach, figuring out who you want to contact, and that includes your own personal network as well as people that might be interested in the idea. Those are going to be forums, journalists, bloggers that talk about that topic or that industry. Then you're going to want to do research. This includes looking at past crowdfunding campaigns, seeing how much they raised, maybe what some of their marketing efforts were, in some of their statistics. You can even contact some of these crowdfunding campaigns, and people are extremely open with talking about their campaign and what worked and what didn't. So you're going to want to do that kind of research. This is all going to give you an idea of what to expect. Okay.
Thanks, Joe. I'm going to stop you because we're like past our hour. So as I mentioned to everyone, that we're going to just jump on Twitter right now with the hashtag Manta Experts. And Joe's going to answer questions there as soon as we give him a minute to take a quick drink of water. For those of you who aren't going to Twitter, send us an email. We'll answer your questions. And you can always send a note to events@manta.com and let us know what you think and what you'd like us to cover in upcoming webinars. So thank you so much for joining us today. Joe, you stay on the line. Everybody else, we're done. Thanks so much for joining us today. We hope you got a lot of great information, and we look forward to seeing you next month. Thanks.